Hey guys, it is yellow flag, red alarm time. Time to talk about Fingermotion. They just filed a 10Q with their most recent quarterly results for the quarter ending August 31st. This is a stock that from time to time that I will swing trade. For me, I like to buy Fingermotion around $1, and usually that happens after a dilution event, and then wait for the pumpers to push the price up again and sell into that. Like we did back here, you can see on the left-hand side, I bought it at $1.30 and then added more at $1.08. It ran up to $5. That's a good trade. This stock has no redeeming good financials, which if it is being shorted, it's very understandable why it is being shorted. And in this very brief video, I just want to go through with you the financials and why I'm saying yellow flag, red siren. Dilution is right around the corner for Fingermotion if management doesn't do something very, very quickly. Imminent dilution is my prediction. I have seen a lot of kooky predictions out on X, social media, even people at this peak right here on October 8th tweeting out that Finger was about to run for the next 30 days. And the problem, guys, with the people promoting this stock out on social media is they will not talk with you guys about the financials, and they look at a chart, but they don't understand the upcoming corporate actions or how bad the cash flow problem is at a company like Fingermotion. And you can see whatever you want on the chart, but the company comes in and says, we need cash. You're going to get the rug pulled out from under you by the company, not by shorts. I don't hate Fingermotion. It's a fine momentum stock, but you must be really intelligent about where you're getting your information from. Very, very picky about your entries, and you must be willing to take profitable exits. People will tell you that there's millions or tens of millions of naked shorts on Finger. I don't know about that. I look at the short interest reported for my trading decisions, and it is pretty low. It's only about 1% for Fingermotion. And, you know, is it shorted for day trading throughout the day? Probably so. But we're going to go through the financials now, and I'm going to show you why the shorts have no fear in this trade and why the company is likely to have an upcoming dilution event. Let's be unemotional about it for a minute. Forget about social media hype and naked shorts. Let's try and understand what is going on with the financials that Fingermotion just reported and why I think the company is about to dilute here in the next several months, maybe even days or weeks. The revenue for Fingermotion came in at $8.65 million for the quarter, and the problem is that revenue is just not growing, guys. There's no debating that. We are 1, 2, 3, 4, 5, 6, 7 quarters in now with no meaningful growth in the revenue. The second problem is negative net income, negative $1.54 million for Fingermotion for this quarter, and they have yet ever to post a profitable net income quarter. The third problem that jumps out as a red flag is a long history of negative free cash flow, negative $1.88 million on the most recent quarter. And if we look back at the history of free cash flow, we have 5 years of this company having negative free cash flow. This is not a good situation. Why are these problems happening? Well, there are a couple of reasons. Number one, the margins that Finger is getting on its revenue are almost non-existent. If we look at the revenue here, $8.65 million, the cost of that revenue is $8.61 million. So the company's not really making any gross profit, and then they have all of their expenses that have to come out after that, so they're continually losing money. The second problem that will jump out at you, keep in mind, revenue has been flat for 7 quarters now. When we go over and look on the balance sheet, first thing that is going to jump out is they have almost no cash left, $220,000. The second thing I want you to notice is accounts receivable. Even though income is not going up, income is flat, account receivable is going up. This is not something you want to see if you're familiar with accounting or if you're familiar with converting sales into cash. The days of sales outstanding here at Fingermotion is close to 400 days. That means when they book something as revenue, it's taking them 400 days to collect that cash. And if you're wondering why this company needs to keep diluting, the fact that they can't collect on their sales is a big problem. And Martin Shin, you need to start talking about this issue and being more transparent with investors. Why aren't these receivables being brought in? Why can't you bring this money in? Because when you can't bring this cash home, the only way to get more money is to sell shares into the open market. So looking at the balance sheet here, $220,000 is not enough to make it through a quarter. They could fix it if they could bring some of these receivables in. That is one possible solution where you could avoid dilution, but they have not really shown a trend of being effective at collecting on accounts receivable. It's mostly going up. They reduced it about $1 million from last quarter. Now, if they could even just collect 2 million or 3 million of that, you push off the dilution risk for another quarter or so. But the trend is very scary here. And I think, for investors, you ought to at least be aware of this if you're deciding to trade the chart or trade this stock or hold it. These are things you must understand so you can properly size your risk and think about what could happen if the company can't figure this out. Dilution could happen. When we take all of these things together, the lack of revenue growth, the lack of any real profit margin, the inability to collect on accounts receivable, the low cash, guys, there is no misunderstanding here, shouldn't be anymore, why this company would be a target for shorts. You can get mad about the shorts, but they're reading the financials and saying, this is a slam dunk for us. You need to hold management accountable to tell you when are they going to grow revenue, when are they going to bring receivables home. And when that dilution risk goes away, maybe the shorts that are day trading this thing and holding it down, pushing it down, maybe they're not so emboldened. I imagine right now the shorts are probably salivating at the idea of an upcoming dilution event, the company needing to raise several million more dollars by issuing more shares and the price pushing down. And for me, as a swing trader, I want to really manage my risk when the financials are not great. You're only looking at a swing trade based on a chart. You need to get the absolute cheapest entry because this is a set of risky financials. There's literally nothing good I can talk about here on the financial statements. If I'm going to swing trade it, this is for my speculative traders only, my most gamblers of gamblers. You want a really good entry, a cheap entry. For me, that's around $1 to $1.25. So I will continue to sit out on Fingermotion and see if they announce a dilution event, see if they drop the price back down into this demand zone where I feel comfortable. And if they don't, and they come up with some shenanigans like Bitcoin treasury or issuing warrants, how all the tricks that these people do to try and get you interested in not looking at the financials. If some of those tricks get deployed into the market, maybe you get lucky here if you're stuck at $1.62. For me, I like gambling plays, but I got to understand and manage my risk. So I am still not in this trade until the price collapses a lot further from here. My final thoughts are be very careful of someone who is only showing you a chart or only showing you short interest and refusing to talk about the things that I talked about: lack of revenue growth, negative net income, growing accounts receivable, and no cash on the balance sheet. If they're not talking about those four things, there is a reason that they're not talking about it with you, and you need to ask yourself why. Thank you for watching. I am Tony Denaro, and I will see you on the next video.